Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is real estate investment experts Dan Haberkost and Mason McDonald. Now, Dan is the founder and CEO of Front Range Land, and Mason is the founder of Colorado Land Acquisition Services, and both of which are investment firms that focus on raw land investments. Now, this type of investment runs the gamut of infill plots of land in suburban areas, rural tracts of land, ranches, large land development, and much, much more. And while Dan and Mason run their own independent investment firms, they co-own a lending company that specializes in lending on raw land. And so for that, I thought it'd be fun to have them both join the show at the same time.
Dan, Mason, how you guys doing today? Welcome to the show.
Glad to be here, Kevin.
Thanks for having
Yeah,
us.
excited to have you guys. Excited to talk shop. I know I was on your show a number of months back, so excited to flip the tables here. So, I'll give you that brief introduction. I know there's a little bit more to the story, so why don't either Dan or Mason, one of you guys, take the opportunity to go first, give our listeners a little bit more of a background of yourself and how you ultimately found your way into real estate.
Sure.
Dan,
So,
you're younger, so you can go first.
yeah. Well, grew up in Ohio, rural Ohio. Didn't want to stay there. Everyone I knew worked a job, and I wanted to figure out how to start a business. So I was working full time in college, started reading different books on investing, stocks, and like everyone else, I read Rich Dad Poor Dad, and it was like light bulb moment, right? And so I was working full time, going to school, so I had a middle class income, at least by Ohio standards. And so I went and bought a duplex as a house hack. Shortly thereafter, got out of Ohio, moved to Colorado, bought another house hack, and realized, okay, this is great. I was in my early 20s, but if I really want to make a lot of money and buy a lot of rentals, I need to make a lot more money than I'm making at my day job. And so started going to the real estate group in Colorado Springs and met a guy who'd been in land and development for, since the 70s, right? So this is 2018. And he kind of took me under his wing. I would go down to Pueblo every weekend for anyone who knows where that is in Colorado. And he was building homes in Pueblo West. And so he started to teach me how he was doing that. And then my first few land deals were going and getting lots, going direct to seller, getting lots and assigning them to him and his friends so that they could build. And then slowly started to participate with him on the builds. And over time, I really just took his business model and ran with it. And so fast forward, 7 years here, I've bought and sold, built on, subdivided hundreds of pieces of land all over the place, and that's expanded outside of Colorado. Even though Colorado is still my main market, I do a lot in the Southeast as well, and have continued to buy rental properties along the way.
All righty, awesome. No, I appreciate that background, Dan. Mason, how about yourself?
Yeah, so I grew up in Houston, Texas, was kind of the byproduct of two households with the rich dad and poor dad. I had my mom and stepdad that were very stable, Jewish moms, so my career options were doctor or attorney. And then I had a dad who inherited a pretty large commercial real estate portfolio, and I saw the lifestyle that afforded. But I kind of wanted to go the traditional route, went to school, majored in neuroscience. Went and got my master's degree in healthcare administration and started in the corporate world. Worked my way up really, really quickly. Became CEO of a hospital here in Colorado Springs at the age of 26. So was managing
Wow.
$100 million P&L. Had done capital expenditure projects over $30 million. Gained all the experience. Had the title, the glory, and everything like that. And I was also hypertensive stage 2. So my blood pressure was about 170 over 120, which is, on the fringes of having a
Jeez.
heart attack. But had been exposed to real estate, listened to all the podcasts, read Rich Dad Poor Dad. Same story as Dan, just got started later, but learned about land flipping in 2021. Bought my first piece of land for 43 grand. Sold it later or at the beginning of 2022 for $185,000, which allowed me to quit my job, as well as having a wife who was a software engineer that was able to support our household. So it wasn't time management. It was because I had a really, really great cushion. And just like Dan, built a land flipping business kind of throughout the entire United States. I've done about 200 deals at this point in time, and I own a commercial building that's the bane to my existence, and I really am just tripling down on land. From the pain points of creating this business, realized one of the biggest frustrations was bad realtors, so I became a realtor. I only do land. I've only been a realtor for 2 months now, and I've got 9 deals that we're closing already on the broker side. So rapidly growing that and trying to kind of disrupt the land agent space. But that's kind of high level who I am and how I got here.
Well, I want to dig into that because there's something there. But kudos to you, 26, CEO of a hospital. I mean, that's pretty impressive. So I'm curious, and we can dive into it. But just that's quite the opposed, just day to day of what a land business, probably running your own business looks like, and just being an entrepreneur at that point in time, right? Not being in the corporate world. So excited to dig that apart a little bit. But I would say. I would love to get a sense. I don't want to lose this one. You got licensed as a realtor 2 months ago, and you kind of you reference it as like I've already got 9 deals working. So what was the broken piece there with how typical land agents would operate that you're doing differently that you maybe attribute to those 9 deals that are up on the board?
Yeah, I'll answer for myself and then I'll pass it to Dan to hear his insights too. But I think in general, most agents don't know anything about land. So it's really unique whenever you're able to find an agent that is willing to do the work and put the same level of effort in, because a lot of times land is going to be at a much lower price, which means your commission's going to be lower. And so people don't
Hmm.
focus on it. But I think it really just came from the challenge of solving my own problem. I'd spent over 500,000 on agent commissions over the last 3 years for other people selling my property that I knew more about than they did. So was kind of wanting to do that vertical integration piece into the business, but it's really just focusing on the niche and really understanding land as an asset class. I think it's surprising to me how few realtors actually know land at all. When I talk to other brokers, they're like, "What do you mean you won't do houses? Houses are so easy." I'm like, "I don't know anything about houses, but land is easy to me." So I think just focusing on that niche, having done a couple hundred transactions as an investor, has given me insight that most land agents don't have. Most land agents probably don't
Yeah.
own that much land themselves.
Yeah, and guys, I want to give a little more context here, just for those that are unaware, is that Dan and Mason work together on numerous different fronts. They host podcasts together. They kind of run their businesses congruently, but they run independent land investment businesses. Is that correct, guys? Did I get that right? I mean, you guys both have your own entities. You're doing your own thing, but ultimately, you've got some cross collaboration that happens as well. Correct?
Yeah, the main thing that we do together is people listen to the podcast, they have land that they want to send to us to get capital for, and we have our own entity where if someone submits a land deal to us, we do that together if we're going to take it down with our own money and execute the deal.
Okay, no, understood. So let's talk about, I mean, land. Why land? I mean, I get it. Everyone has that same question. Houses, right? Like that's the common. People start buying single family rentals, maybe small multifamily stuff, and there's various other types of commercial real estate assets out there. Land is very much misunderstood. I can I can understand that perspective from a lot of folks. I mean, we mobile home parks aren't all that strange today, but they were 15 years ago when we started buying them, right? Like people just, it was an odd, awkward conversation most of the time when people would ask, "What do you do?" "I buy mobile home parks." So like that is so weird, and kind of the same with parking. We buy parking investments, parking lots, parking garages, and kind of the same thing. Like I've never met anyone that owned a parking lot or parking garage before. I'm like, yeah, understood, but it's a unique niche, right? It's an alternative asset class, and it very much is nichey. And so land probably falls in similar camps where the majority of the real estate investors out there, brokers, agents, they have no idea, right? They have no clue exactly, not necessarily what land is, but just the uniqueness of it and how to market it appropriately, how to find value in it and all that. So let's talk about that. Let's talk about land. What really attracted both of you guys to it in the first case?
Yeah, what Mason is hitting on with a lack of competent realtors is indicative of the whole overarching point, which is that land is extremely inefficient. There aren't many competent people in the space relative to other real estate assets. And I think that's probably a
Mhm.
lot of what drew you to mobile home parks initially. Inefficient, a lot of mom and pop owners, no big, at
Yeah.
least when you started, private equity firms in the space. And that leaves a massive return on the table. And this is the same story with land. I mean, it still blows my mind. I mean, it is the basis of all real estate, right? Every building is built on a piece of land, at least before the digital assets came around. Yet nobody or very few people know much about it. And so it is so much easier to move into the land space, buy deals with tremendous upside on market or off market. You don't face the same competition. A lot of apartment owners, mobile home park owners, they don't even try to keep a secret really what they're doing or where they're operating because, I mean, it's all the same, right? It's a far more efficient market, especially in something like apartments. Whereas in land, I mean, there are parts of the country where there's tremendous consumer demand for lots, whether it's for recreational use, just to build their own home, small builders who will buy lots. Yet there's almost no big competent operators. And it's just, I could go on and on about this if you can't tell, but the returns you can get in land, if you know what you're doing, are just astronomical and they are much easier to get those deals. We can talk about specific deals and properties we're buying, some of which are on market with tremendous upside, but it's just extremely difficult to do that in other asset classes, at least within real estate from my experience.
Yeah. Yeah. So let's talk about the business model itself. I know there's we say land, but there's multiple different facets of the business. I mean, there's buying infill lots in a densely populated area. There's the complete opposite of that, which is buying rural tracts of land out in the middle of nowhere, and then probably everything in between that. So I guess give us a better understanding of your business model. How you guys approach land, and again, where you find the value.
Yeah, I think it's kind of all of the above. I feel like both of us have been drawn to different aspects of the land. I feel like Dan's done a lot more of the traditional infill, just buy at a discount, resell right away. I've done some of the more rural, recreational, and kind of everything in between. But uh, the simplest answer is we buy for cheap, sell for more from people that have owned the land for a long time. They want to get rid of it for whatever reason, and they don't want to work with realtors. But a lot of what Dan and I are focusing our time on now is buying the large rural tracts of land and going through the exempt subdivision process,
Mhm.
whether, it's state by state, whatever they're going to call it. But Colorado, if you keep land over 35 acres, all you have to do is get a plat map drawn, get it recorded, and get new APNs and legal descriptions issued. And then it's done. And, it's buy the ranch, sell it by the pasture. There's a lot more buyers for a 35-acre lot than a 350-acre lot. But regardless, in hot areas where there's finished developments, especially, I mean, truly shovel-ready land throughout the entire country, that the developers had to go off and sell these individual lots to people decades ago that were able to go buy and resell right away. I think adding on to Dan's answer, one of the really appealing things about this business was the lower barrier to entry, not just on a competition standpoint, but the fact that without debt, I could go purchase an asset that's worth 1.5 to 3x what I paid for it and be able to control the asset myself with no debt. Buy it for 20 grand, sell it for 30 grand, and keep recycling it over and over.
Yeah,
You know,
no, that's great. But I guess how to determine where you're going to focus, right? Like it's such a large swath of land out there. I mean, the shotgun approach, while that obviously has its merit and its benefits, I'm assuming you've got to have a little bit more of a sniper approach when you're determining markets that you want to go in. What type of land am I looking for? What size land am I looking for? So help us better understand. I mean, because you're not going to be sending out 10 million pieces of mailer,
mhm.
a week, right? And you would have to if you were just going to go after everything. So how do you guys really hone in on what's working for you at the present time? Like what is your target focus like this quarter or this year? What's that strategy look like?
Well, if for somebody that's new, I would say really pick something and focus on it and get better than everyone else at that thing in your market, right? If you try and do everything, you're going to get burned. There are so many just nuances and county regulations and little things that will trip you up. If you try and go too wide, you will absolutely lose money. And so for me, my first, I don't know, 50, 60, 70 deals were all in Pueblo, West Colorado. We were building a bunch of
Okay.
houses. Some of them would keep and build on. A lot of them I'd just flip to other people. Some of them I'd sell on terms, but it was all one simple product in one place. Over time, I expanded. I slowly got to learn rural tracts and what to do with those in
Mhm.
Colorado. And then we had some water problems in my main market in Colorado, so I had to expand because the market shut down for a while. And so I got into Florida and learned a couple places there, and it was incremental over time. And you reach a point, hundreds of deals in and years in, where you do understand, rural recreational land in a couple states, plus infill lots in a few areas, and everything, and timberland and everything in between. So you kind of build on your tool belt over time, but you absolutely want to start with with one or two types of land, or ideally one type of land, maybe in just a couple markets, or else you're gonna get burned.
And to expand
Yeah.
on Dan's answer right there of like what market, because some people might live in you know, midtown Manhattan and there is no land and your barrier to entry is too high and you're not going to be able to do it. But it's find places where there is demand. I mean, so tangibly hop on Zillow, look at sold land data in the last 90 days, compare it to what's coming on the market. You know, if it's a 1-to-1-ish ratio, of sold to for sale. It's a pretty in-demand area. You know, it looks like land's probably going to cycle in a 90-day period of time. You know, so find acreage or square footage lots that are similar size, target them via direct mail, cold calling, texting, all the direct to seller marketing chains that you're familiar with, and then offer them, you know, cash for their land based on what the required
Hmm.
returns are based on your investment thesis and your business. Now, what we're
Yeah.
targeting more, I mean, specifically, acreage that is east of I-25 in Colorado, ideally 160, but more like 300 to 500 plus acres, you know, kind of within 50 miles east of I-25 in Colorado, because as Denver grows and Colorado Springs grows and Boulder and Fort Collins and Pueblo all grow, there's kind of this exodus that's still been continuing on since COVID of people wanting to get a little bit of land and a little bit of space. And so these affordable 35-acre tracts where you can offer seller financing is really, really appealing. And that's kind of where a lot of our focus is.
Do you have a difficult time, like when we start talking about like, tracks that are 100 acres, 200 acres, 300 acres, or maybe even greater than that, the difficult time finding comparable sales? I mean, just really getting a clear value of something that's, I can't imagine there's hundreds of tracks of that size that trade in every year, every couple of years. Or maybe I'm
It,
wrong there with that
it
statement.
can be tricky if you wanted to just resell the whole parcel, because you're absolutely right. There aren't a lot of
Okay.
those selling, but it's very easy, speaking of Colorado specifically, where we both know it like the back of our hand, right? 35 to 40 acre lots trade constantly because that's the threshold. 35
Okay.
acres or larger, and you can drill a well by right, right? You don't need any water rights, a domestic well, and you can split down to that size just with the exempt subdivision process. And so there's tons of 35 to 40 acre parcels that are trading and pretty easy to comp those. And one more thing I just really want to hammer that what Mason's saying is the financing side of this. We haven't even talked about that. That's a
Yeah.
whole nother opportunity. If you're buying lots, there's a deal. We're getting the survey done right now. They're working on the legals right now. It's 640 acres. We're splitting it into 16 parcels, buying it at 410,000, collectively selling 800 to 850. And we're going to try and sell all of that on terms. And so if you can sell, which you can at 10 to 12% interest on top of
Hmm.
that, oh, on a 10 to 20 year amortization, do the math. It is outrageous. And so it's really a blue ocean compared to other spaces. And that's another component of that, in my opinion.
What are the costs associated with subdividing a parcel such as that? Maybe let's use this one's a case study. Like, what's your all-in cost there to conduct that and the time frame that it takes to do it?
Yeah, this is the beauty of it. It's going to be 14 to 16,000 all in for the survey, the new legals.
Hmm.
They're setting T-posts at the edges or at the corners, of all the lots, so people can put up fences and clearly see their lots. And then it's just closing costs. So going to be all in at 430-ish. Now, what we're looking to do is leverage it. So we're talking to a few banks and see if we can get, which we should be able to, an 80% loan, only keep 20% of our cash in it. And then there'll be some interest costs along the way. But we are aggressively working to sell these things where I expect we'll have income from note payments coming in quickly here. So there'll be a debt cost as well. But the actual cost to do the subdivide is about 15 grand in a week that it takes
Okay.
to do the
Wow.
survey. Yeah.
What proportionate share of the folks that are going to be your end buyers, come in with cash versus those that are really attracted to the owner financing option?
What I'm seeing more than anything is I'd say like 90% seller financing right now. We
Okay.
just got
And what?
another. Go ahead,
I
Kevin.
was sorry. I was going to say what type of terms? Yeah, I knew you said 10 to 12% interest, but like what kind of down payment you're requiring from them, and over what period of time?
So for me personally, on deals, I usually require a higher down payment, and that's mostly because I have a greater desire to get my capital back. Whenever I'm working with the group that owns 100 of these 35-acre lots right now. They offer 10% down, 10.5% interest up to 30 years fixed. They also do something pretty unique where they offer up to $50,000 in improvement costs. towards well, septic, electric that they'll finance as well. But
Hmm.
it's that 10% down because going back to, once again, adding on to the point of why we love land and the inefficiency of it, go to a bank and try to get a loan for that. And you're going to be at a minimum putting
Yeah.
30% down. Interest rates are going to be similar. And typically you're going to have a balloon payment. Yeah, there's some rural and community banks that'll offer better terms, but not really. And so being able to increase your buyer pool by not really requiring too stringent of credit applications or ridiculous income statements and everything like that works out well. And being able to do it in a state that has moderately easy foreclosure laws, especially whenever
Yeah.
it comes to land, is also helpful because I've only had to do it once. I did a deed in lieu of foreclosure, but I know plenty of people that foreclose on land and have sold the same lot, three, four, five times.
Yeah. What's it? I mean, is it a pretty quick process in Colorado? If
For
someone
land,
for if yeah, if the default.
yeah, for land, it's not bad. It ends up taking, 90 days to 6 months, depending on,
Okay.
how compliant they are. But the deed in lieu of foreclosure is always, a pretty attractive option that personally I try to go, just to not, you know, be as generous
Yeah.
as we possibly can.
Yeah, unless you got a stubborn buyer or I guess a property owner, right?
Oh
Like
yeah,
they're just
absolutely.
gonna make you go through the motions. Well, I mean, what is in the period that you guys have been in, and the years that you've been in it, what have you seen as far as the default rate? And then I guess maybe what does industry standard look like for, there's other sounds like there's other folks that have been in this land business for maybe even decades that do a similar model that are, basically buying it at a discount and then seller financing it on terms. Just curious to know, like, we had a kind of a bull market for quite a number of years. That's changed a little bit over the last couple of years. And just curious to know, in the bad times, what do the default rates look like?
I just was with an older friend of mine who has a much, much, much larger business and a large portfolio of notes. And talking to him, I want to say it was in the high single digits. That was a
Mhm.
more, yeah. So,
Yeah, and I've seen less than that, but I've also seen it, Kevin, it's entirely dependent on the land.
yeah.
There's so many people in this business that got started by going and buying these, 1 acre desert squares in the middle of nowhere in Arizona or New Mexico or Southern Colorado that has just truly no value. They buy it for 1,000,
Hmm.
they sell it for 3,000, at a
Yeah,
hundred bucks, $100 down, $100 a month for the next 5 years or something like that. Super high default rates. But these beautiful properties that are, the dream that we're selling with these is here's a homestead for your family. You can build a house and ADU and have your own little farm and everything like that. People aren't defaulting on that product as much. So, I mean, this group that I'm working with that have
that
done
makes
hundreds
sense.
of
Yeah.
these, they just had their first two foreclosures this year. Um, and they've done hundreds. So very low.
Yeah, no, that makes sense. That makes sense. No, I've had folks on the show years past, and it's funny that you mentioned like the $1,000 little squares of land out in the middle of the desert somewhere. Like it seems like whoever bought that, maybe they got a dream. They're going to go out there and use it. They're going to pitch a tent. They're going to take their camper out there, and then realize that ultimately, that's just not their dream's not going to come true. And should I keep paying this $250 a month or $300 a month? I'm just gonna just let this thing go, right? But if it's a 30-acre parcel of land, it's in a couple hour proximity of some major cities, major MSAs. It's a different demographic, I'm sure, that you're serving. So the 30-acre, 35-acre stuff that we talk about in Colorado, what does that typical tract of land sell for?
It's going
Once
to
you guys
vary.
have subdivided it, once you've broken it up and are ready to sell it off.
So, first three rules of real estate are location, location, location. So it's really dependent on how close it is to the city. And then there's some, factors that, make it more desirable. But we're selling anywhere from 65,000 to 200,000. So the deal we went under contract today on the buy side that I represented, we're going at 165 grand. Their plan is to build a nice, 3 bed, 2 bath spec home with a pole barn. They'll sell it for about 540. So they're an
Okay.
investor client, but yeah, anywhere from 65 to about 200 grand, depending on the location.
And what for that person to come in, they're going to put in septic and well. What's that cost them? Another 20 grand to put in, maybe 25 grand septic and well system?
A
A
bit
little bit
more.
more.
Yeah.
In
A little bit more. Okay, yeah, not
yeah,
sure.
about probably about 50 grand ish total
Okay.
for both of those. Septic's running about 12 to 18.
The
Well,
well's got to go pretty deep, I'm assuming
Yeah.
then, right? Is that why? Okay.
yeah, it depends on the well depth, which most likely you're looking at anywhere from 30 to 50 grand on the well, depending on how deep.
Yeah. Yeah, I'm a little skewed. I'm here in Florida, so like our water table is like 7 feet underground, right? So
Yeah.
Yeah.
we can get down into a couple different aquifers fairly quickly, so it's not all that expensive
Mhm.
to drill wells.
Yeah. Different story.
No, yeah, yeah. Oh, good. Well, I mean, what have we talked about as it relates to this business? I mean, you buy at a discount, buy high, good, land that's well located, right? Location, location, location. Like that's number one key for whatever investment you look at. So you guys buy great land and great locations where the people actually have a desire to live or to use it recreationally. Buy at a discount, resell it at a higher value. Sometimes it's just, one for one. You buy a piece of land, you sell it as that same piece of land. Sometimes you subdivide these larger tracts of land. You love the owner financing game. I mean, there's obviously lots of opportunity there. But what other pieces haven't we covered as it
Well,
relates to this business?
one distinction that I really wanted to make to something you said earlier, you said, oh, some people choose houses, some people choose land, etc., is I still own houses and buy rental properties because I see these as different buckets. These land notes are great, but they're getting eroded by inflation and they'll run out. And I can't depreciate my land. And so I see the land, having started from zero, the land is the active bucket to generate cash and make money and multiply my money, and then continually buying the rental properties is my 401k, so to speak. It's the get rich slow sort of method. And
Yeah.
so I see those as different buckets, and the rental properties also help, shelter the income from
Hmm.
taxes. And so yeah, I think 100% bonus depreciation will be coming back. So going to
I hope
continue.
so.
Yeah. Oh, one more point I wanted to make too is the beauty of land is literally from the ground up you're controlling the asset and there are layers of value each step of the way. And so I'm working on getting a large ranch, and this is with partners. I'll just own a percentage of this, but a large ranch in Colorado right now where it's 2,400 acres, and we would love to take. We're trying to figure out the water rights right now, but we'd love to take a piece of this and go all the way from the raw dirt to a smaller subdivision with acre to 5 acre lots that we build on. And our basis in the land, if we're able to do this, will be so low because we bought the land at a discount. Then we did the subdivision ourselves, which is another layer of value add where we just kept that in-house. Then we went vertical. And so whether you're, just building homes where you did the whole subdivision yourself or building rental properties for yourself to keep, which I did for the first time last year, you can be in such a good place with your basis because you went through all those steps because you started at the land and you just kept right the equity you built through each stage of
Hmm.
taking the dirt, subdividing it, etc. I mean, it's just incredible. And so I think it goes hand in hand with whether it's a mobile home park, probably not parking lots, but a mobile home park, apartment building, or a commercial strip center. If you know how to buy the dirt right and develop it, you can be in at such a low basis on a brand new building. It's really incredible.
Yeah. Is there any risk that lies in maybe not that example you just gave of that very large tract of land, maybe some of these smaller tracts of land that you're buying at, lower price points. Is there any risk that lies in, environmental concerns? I mean, I don't know how deep you guys go. I mean, if you do phase ones before you buy something, just or any other risks I'm not thinking of that might pop up. Like, do you guys go do perk tests
Mason,
and
let me
just
say one thing, and you can take it. This is very, very market specific. I do lots of perk tests in South
okay.
Carolina, but then go to the infill stuff we're dealing with in Florida, and nobody does perk tests before buying it. And so this is why you've got to, and why I said focus. But we have an extensive market specific due diligence sheet where we have aggregated years and years and years and hundreds of iterations of knowledge into. All right, in Lee County or Charlotte County, Florida, watch out for turtles, right? Turtles are a big problem there. In Brunswick County, North Carolina, this specific sort of wetland almost always fails perk. And, so you have to learn as you go. And when you're new, finding competent local experts, whether it's builders or realtors, to help advise you is absolutely essential or you're going to get burned.
Yeah,
Yeah.
and I'll do a two-story tale where, I made a mistake. I lost 43 grand on a deal a month and a half ago. So, learned my lesson there, where it was the only multifamily piece of land in this particular market. There was a creek that ran through it, so you were going to have to build a bridge, and it was sloped on one side. But I thought I was getting it at such a discount, being such a unique property, that we were going to be able to, make a great deal on it. Obviously, that didn't happen. I lost a decent amount of money on this one deal, but it was because I didn't do all of that work, which in hindsight, it's different whenever it's just kind of a rural or, a rural lot that people are going to build their single family home on, or even an infill lot where it's such a, simple short list of due diligence where I should have done a lot more studies on that land. I kept it, as if it was a single family piece of land. There was a certain amount of buildable area, but at the end of the day, developer could build about a duplex on it instead of 40 units, which
Oh,
obviously,
wow.
makes it so where the institutional guys or even the mid-size guys, it's too small of a deal, and for some of the bigger guys, the land price was too high, to justify a spec home build, and that's one where I should have done a lot more. One where I did almost none. Like it's the exciting deal in my pipeline. I just bought a 480-acre gold mine in Alaska. Uh,
Oh my gosh.
and three mining claims, comes with three bunkhouses, an excavator, a bulldozer, F-150, Polaris side by side, washing station, has a creek running through the property. Uh, the list goes on and on. I bought it for $30,000. Deeds getting recorded
Thir
this week.
30,000? Wow.
$30,000. So I'm like, I
What's
can.
that really what's that worth?
We're going to market at 750. Um, so we'll see. If I sell it at 20% of list price, fantastic. If I sell it at 100%, obviously that's a grand slam deal. But I could
What's the
go
story there? What was the
and
motivation?
yeah,
I mean, I know
I
this. Everyone gets home runs every once in a while. That sounds like one of those. So, but I love the little bit of a backstory if you have one. And
yeah,
I don't
so
want to jinx it for you because it's not a done deal. Or maybe, hopefully, it's. No, you said it's done. The deed's literally getting recorded. So,
yep,
um,
deeds recorded, already bought it,
okay.
everything like that. The seller loves me, send me handwritten thank you card for buying it, like ecstatic about the purchase. So I mailed this person maybe a year ago for some land out in Cripple Creek, Colorado. She had inherited her brother's estate. He owned about 40 mining claims in Cripple Creek. And didn't know what to do with them. Bought and sold two of them, so had helped her out. She enjoyed working with me, and then she had this last claim, this weird Alaska deal of his that she just couldn't sell. She had been trying to sell it like on Facebook Marketplace, but she wouldn't tell anyone the location of it either because she didn't want someone going out there and like snooping around. And I mean, because like I said, of the tremendous upside, I could go sell the excavator for what I paid for the land, at least, if not more.
Yeah.
And so, this, then the other thing, and she sent me all the details, and I told her, I was like, look, I can't buy this. I don't know anything about gold. I don't know, other than the price of gold is very, very high right now. I don't know anything about Alaska. I don't know anything about mining claims. I can't buy it. For me to take a gamble like this, and I said in parentheses, this is not an offer. I don't actually want to do this. I'd have to pay like 20 to 30 grand. And then just kind of left it at that. 3 days later, she messaged back saying, I know you said it wasn't an offer, but if you pay us 30 grand, we'll give it to you. And to me, that's a bet I'll take
All
all day.
right.
I figured, I could sell the
Yeah.
equipment at the end of the day. I had to pay an agent a $25,000 retainer to go out there and, start the marketing process. They're getting a 20% commission on the deal, the agent is. But, the upside is just so high that I couldn't go through with the due diligence, which I started the process. It was going to cost about 50 grand, and geologists going out and studying and, running tests on the land to figure all this stuff out, which I could have done. But I don't care because I can sit, what amounts to be $55,000 to the side and just hope that in the next couple of years I'll be able to, take home the bacon. But I think some hobbyist is going to buy it for, 500,000, 600 grand or something like that, and I'll have a good payday. But those are kind of the two stories of, hey, here's one I really should have done due diligence on. Here's
Yeah.
one I don't care because the upside is just so tremendously high that it doesn't matter.
Yeah. Yeah. What's the agent that you've engaged out there? What do they feel? I mean, are they incredibly knowledgeable of the market? I mean, they've got a good
Yep.
feel about it.
Oh yeah. And so a lot of the gold mining in Nome, Alaska is offshore. But this guy, he's got other listings in the area. My listing is way smaller. His other listings are 100 million plus. So he feels pretty confident about it. And for him, he's been doing business in the area for 20 plus years, but these claims trade so irregularly when people get a hold of them, because I don't own the dirt. I own the right to mine it.
Yeah.
It's just subsurface rights. It's through the Department of Natural Resources in Alaska. But he feels confident about it. He's not too stressed he was already going to Nome, so now I basically paid for his flight, for him to go work on a much bigger deal. But yeah, I mean, he's a great agent so far, really knows what he's doing and feels, cautiously optimistic of us being able to sell at or close to list price.
Well, good deal. That's exciting. Well, awesome, man. Like, no, this has been a fun conversation, guys. Appreciate you coming on here. So, for those that want to learn more about both what you guys have going on, if you want to share the the podcast as well as links to both your websites of how folks can track you down.
Yeah, if you want to take a listen to our podcast, The Big Picture Blueprint, Kevin has been on the show. We've had tons of land investors, multifamily, single family, all sorts of business owners and operators on our show. If you don't want to listen to us monologue more than we already do, just check us out on, Instagram, Mason R. McDonald. And then Dan, if you want to share your stuff.
Yeah, just Dan Haberkost on any of the socials or danhaberkost.com. And like Mason said, the Big Picture Blueprints where you can find us both.
All righty, good deal. Well, fellas, appreciate you coming on the show, man. It's been a pleasure speaking with you.
Thanks, Kevin.
All right, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.